just the broader markets, right? Like you look at the stock market in general and what's happening with interest rates and how, labor force participation and the MSI numbers basically are saying we're headed towards recession. In your opinion, are we in a recession?
Yeah.
Does this look like the 70s for you? Are we headed towards prolonged stagflation? And is that going to be a drag on broader assets for a long time?
I think so. I think yes to all the above. We're in a recession. We are. This is not 1982; it's 1972 in terms of a metaphor or analogy. Most folks are unaware and unprepared for the scenario that we're in today because the 70s was so long ago. It was over 50 years ago. And most folks don't have a personal experience of the investment marketplace 50 years. Their personal experience is anywhere from 1 year to 40 years. I mean, I can occasionally find people like me who got into the financial markets in the 80s, but I'm now 64. And so there aren't too many people who have 40 years of investment experience. So if you have less, if you've got 5, 10, 20, 30 years of experience, that means your experience is the 80s, 90s, 2000s, and teens. All good. We've seen 40 years of declining interest rates, nothing other than that. We've seen 40 years of an incredibly booming stock market and real estate market, nothing other than that. Oh, there have been pockets here and there, the dot-com bubble, the 2008 credit crisis, the pandemic, but those were short-lived experiences. The crash of 87, those didn't last long. They weren't long-term sustainable trends. What we're now experiencing is a generational shift. Just like we had transitioning from the 60s and 70s into the 80s and 90s, where we had interest rates that are now, for the first time, coming down. For 40 years, interest rates have been steadily going down, which means for 40 years, bond prices have been steadily going up to the point where people think that's all that bonds ever do. Anybody who's ever invested in a bond fund or a bond only thinks bonds rise in value. They don't understand the interest rate risk that they're suffering. Well, now with interest rates rising for the first time in their collective experience, they're now seeing the worst bond market since 1842. And most people don't realize the calamity of this. They don't realize that this is not a short-term thing. This is a long-term trend. We're not going to see interest rates returning to 0 point nothing like they were over the past decade. We're going to see continuing increases in interest rates over the next several months, certainly the rest of this year, possibly, probably well into next year, Q1 at least, as the government tries to rein in inflation and rejigger the economy to get it moving again.